Guyana, which is an overseas territory of France in South America. And a little funny fact about me is that I grew up near the European Space Center. So every 3 weeks when I was in my bedroom, I could hear a rocket being launched into space, which is something quite impressive. If you haven't experienced that, I would really encourage you to do it. The noise is just unbelievable. But I came here in Australia when I was 18, a young pup on a skilled migration visa. So I know exactly what you guys are going through and want to achieve. I'm also at the moment trying to bring my parents over on a parent visa. So believe me, all the immigration paperwork and calling the Australian Immigration Department, I know what this is about. I think we've got a few other people joining us. Hello, for those that have just joined us. If you can please mute your microphone if you haven't already, thank you. Just to start, so as I said, William Buck is an accounting firm, quite a reputed accounting firm here in Australia. We've got a few offices around Australia. I can't really, for some technical reason, put the screen into full screen mode. I apologize for that, but I'm sure you can see my slides. So we've got a few different offices in Australia and New Zealand. We've got about close to 1,000 staff, to be honest, right now, 9 offices, and we've been around for 125 years. Obviously, our firm's been founded by a gentleman called William Buck, believe it or not. So William Buck is a leading mid-tier firm, and what mid-tier firm means in Australia, well, and I guess in the world, is that we're not one of the big 4. So we don't charge the KPMG, the Ernst & Young, and the Deloitte sort of prices. We not the sole traders down the road that, you know, operate a business on our own, can't really get on top of everything. We're actually in the middle. We're in the top 10 in Australia, and we basically able to source all the services that, you know, a big accounting firm would be able to do, like KPMG. We do broking, we do financial planning. We have some really good ties with legal advisor like Joanna, and that allows us to service our clients beyond, you know, what our jurisdiction or our professional abilities would allow us to do. So we are the perfect sort of accounting firm for people like you that obviously do not want to, you know, put another mortgage on their house to be able to pay the accountant, but still want a solid advice and a good network of advisors. On top of being in Australia, we're not international, but we do form part of an alliance called Prague City. It's one of the biggest alliance of accounting firm in the world, basically. And that allows us to work with other offices around the world, Hong Kong, Singapore. We've got over 700 offices, and we're on 110 countries on the 5 continents. So wherever you are from, wherever, you know, your dealings are with, if with another country, we're able to work with other accountants to make sure that obviously not only we know that we're doing the best thing for you in Australia, but we're also doing the right thing for you back home or in another country. So that's really important, because not a lot of accountants are able to get that reach unless you're one of the big 4. So I just thought we'll jump straight away on the Q&A section, because obviously that's what we're all here. Joanna has sent me a few of the questions that she's received in the past and over the forum. So I just thought I'll go through all of them. And as I'm doing that, obviously there will probably be more questions raised, and you guys will probably have to send a few of the questions on the live chat or whatever forum Joanna gave you, and Joanna will just relay the messages to me, and I'll try to do my best to answer your questions. Now, a bit of a disclaimer. Tonight, I am not giving any tax or financial advice. This is just a very generic conversation. Obviously, if you want a specific tax advice, and you will understand that when we talk today, that you really need to get specific advice in accordance with your circumstances. What would work for you will probably not work for other people in the forum. So really here, I just want to give you a general view and a bit of an answer on the basic questions, but really at the end of the day, what this is all about is to give you an access to an expert and an accounting firm, if you choose to give you all that advisory and possibly put you in touch with other people that you may need to get in touch with. So a few of the questions tonight. When do I need to pay tax in Australia? So when do you need to pay tax in Australia? A lot of people think that as soon as you're granted a visa, you need to straight away become a tax lodger in Australia. No, this has nothing to do as to when the visa is issued. It's probably more to do with when you actually physically arrive to Australia and move in permanently. So we have those two factors here. So, you know, a lot of people think that you are an Australian tax resident as soon as you've spent more than 183 days here in Australia. That's not necessarily the case. The tax legislation in Australia, so they're looking at simplifying it, because in a lot of countries, it is as clear-cut as that. In Australia, unfortunately, it's never black or white. Residency is always a bit gray. And that's also an area where if you need advice, I would strongly encourage you to actually get advice in accordance with your specific circumstances. You may be a resident of the two countries as well. Unfortunately, Australia and Hong Kong, because I understand most of you are based in Hong Kong at the moment, do not have a double tax agreement. So that creates double up issues in terms of taxation, et cetera, and again, why you need proper advice. So now residency. You become an Australian resident when you can prove that you are one. That's really the premise. So it's a question of facts and degree. It's not, as I said, clean cut. You need to prove that you've established a permanent place of abode here in Australia. What it is that you're renting a home, or you bought a home, and you're proving that you're changing all your postal addresses. You made arrangements for insurances, medical insurances. You starting paying electricity, all this sort of stuff. If you have kids, have you got them at school? Have you moved? Have you moved your items? I'm just gonna mute a person here. Have you moved all your belongings here in Australia, or most of them? Have you brought your pets, if you have any? So it's a lot of questions. And if tomorrow, let's say there is a question mark on your residency and you were taken to court, worst case scenario, the court would actually ask you to prove to them that you really made Australia your home. So again, it really depends. I know some people that have established a home here, but have another home in Hong Kong or somewhere else, in the world. And really, at the end of the day, 1 year they could be a resident, the other year they may not be. So really, I understand that a lot of people go, but what do I need to do? And this is where you actually need to pick up the phone, talk to an advisor, explain to them what your circumstances are, and then we can advise you whether you're resident or non-resident, or what you should be doing to make sure that there is a clean cut, that you are definitely a resident in Australia for tax purposes. But generally for you, I mean, you would move here because you would obviously get a visa. Some of you already have it, but not have been able to actually take a flight. Usually what happens is when you get here,
sorry. I think there's a problem with your, sorry to interrupt, with your screen share. I will stop. Okay, I think we'll stop your sharing. I think your sharing became
I can start
black.
again. I think YouTube took over for some reason, but that's okay. I can go back to it. Here we go.
Okay. Can anybody see? Sorry. Can anybody see the? Yeah. Can everybody see the screen PowerPoint that Eric is currently sharing?
Yep,
now,
I can see now.
Awesome. Yeah, I think it went black. Yeah, okay.
Oh, yeah. Oh, on my side, I could see the Google, some sort of Word document. But that's okay. Technology, don't you love it?
Yeah, yeah. Perfect.
So
It's
really at the end
yeah.
of the day, you become an Australian resident when you actually, and you would know when you become an Australian resident. So that's when you actually need to start paying tax in Australia. So the first year you would get a part year exemption on your tax. So you would only be obviously taxed at the marginal tax rate. And I can explain to you what that is when you actually start arriving in Australia. So if you arrive only in January, so the Australian fiscal year is from 1st of July to 30 June. So if you arrive in the middle in January, then you will be considered a tax resident for the next 6 months, which means two things. One, in Australia, you are taxed on your worldwide assets as long as you are a resident. But if you're a resident, you usually pay less tax than if you are a foreign resident. And most of the time, you do pay less tax. However, foreign residents only are taxed on Australian income. So obviously, if you have a rental property or overseas, not in Australia and all that, and you're still a foreign resident, then you don't have to pay tax. So what that means for you guys is most of you still haven't landed in Australia. So if you're earning any income, it will not be part of your Australian tax return until you actually land here. So it will bring a lot of things, which is probably the next point on the Q&A, tax arrangements before landing. So a lot of people do, and I think the main question when it comes to arrangements, it's about homes. Most of you, or a lot of you, I guess, would own their own home in wherever you are overseas. Now, when you are Australia and a tax resident in Australia, and I said that before, you are taxed on your worldwide income. That means that if you sell your property while you are here in Australia, you will be taxed on it or on a portion of it. If you, however, sell it just before you land here and establish yourself as a tax resident, then you would not be assessed here in Australia. So I assume that was a lot of the questions that we got before that probably needed a straightforward answer. That's a pretty straightforward answer. So if the market permits, you are, tax is not the only reason why you should be selling your house. Are you going to get a good price? Is the market right to sell it? If it is, it might be easier for you to actually do this. And let's say you don't want to go back home, or, that's something that you can do. If you can't do it, however, and decide that you want to keep your home after you arrive here, well, what I would advise you to do is to get a market valuation of your home and have it documented. And if not in English, have it translated in English. Because what that means is that we would be able to use that market value, and the higher, the better, to establish what would be the cost of your property when you arrive in Australia. It won't be what you bought it for a few years ago where you were not a resident in Australia. It will be that market value when you actually land around that time. The ATO usually gives a 6 months time frame because they know you can't really get your property valued as you're boarding your flight. So at the end of the day, what that means for you is that if you will only get taxed on the increment in value between the moment you arrive and establish yourself in Australia and the moment you sell the house, not on the full gain. So a lot of you would ask me, so what are the Australian tax rates? What's the maximum amount of tax? So in Australia, we've got progressive tax rates. And what that means is that from about $0 to $18,000, sometimes $20,000, because we've got some tax offset, you don't have to pay tax. Above that, you need to pay 90 cents a dollar. After that, you need to start paying 30 cents a dollar, and then it goes up 37 up to 47 cents a dollar if you earn more than $280,000 a year. So when you incur a capital gain, and let's say that capital gain is over $280,000 a year, then you have to pay 47 cents a dollar, which is almost half of it. However, when you hold a property for more than 12 months. So if you wait at least 12 months before the moment you actually move into Australia and you dispose of your property down the track, if it's more than 12 months or 12 months, you would get a 50% discount. So you would only be taxed on half of that increment in value. But depending on what that value is, you would be paying up to 47% tax. That's why it requires a little bit of planning. You need to call an expert and just go, okay, what are the different scenarios? What am I better to do? And there's always going to be a bit of a speculative component in the sense that you don't know what the market prices are going to be in the future. So are you better off selling the property now and not pay income tax, or maybe pay a little bit of Australian income tax, knowing that you'll secure a higher market value? These are really good considerations. I'm very much of a business advisor that thinks that tax is not everything. Your goals first, then what the economical practicality of the transaction is all about, then tax. I think at the end of the day, I'd rather make more money and pay more tax as long as I've got more in my bank account at the end of the year. I'm sure you guys would agree with that. So while we're talking about properties, and I'm just gonna, are we okay, Joanna?
Yes. Thank you very much. Very important information. Yes. So everybody's quietly listening to. Yeah, that's really good. Thank you.
So, well, I guess talking about property, the next question is about buying property in Australia. So buying property in Australia actually has something to do with your visa, suddenly. So tax residency was something else. Suddenly buying property in Australia becomes very, well, the visa, when we talk about buying property in Australia, is very important. Because once we get a permanent residency in Australia, we're allowed to buy any sort of properties. It can be secondhand property. When you are a foreign resident, you're still allowed to buy property, but it has to be new residential property. It has to be off the plan, so to be built, or it can be land. But as long as you can prove you have an intention to develop it, to basically build new residential premises. So you can't buy a secondhand house or, something that's not off the plan. So when you are a permanent resident, however, you can do this. So I would say, based on your circumstances as well and what you want to do when you arrive here in Australia, it's important to know that what are your obligations there. If you decide to buy new residential premises while you're overseas, and we see that happening a lot. I was at an auction this weekend and I saw some people, buying a property from overseas through their iPad and their agent on there. That was quite extraordinary. But these people would have to do two things. Obviously, that auction that I attended was for new residential premises, so they could have bought it, that's fine, but they also have to report it to a body, and always have to remember what it is. It's the Foreign Investment Review Board. And there's a lot of paperwork involved with this. So what I would say is if you have a permanent residency visa, it's not going to be an issue for you. You'll be able to buy a property. You'll be able to send the funds, and we'll talk about it later, because I guess that's the next question. How do I buy it? That's not going to be a problem. Buying property in Australia does not give rise to taxes, or should I say to income taxes. It, however, does incur one tax, which is called stamp duty. Stamp duty is a state-based tax. So in every different states of Australia, the rate is different, the levels are different. So I can't really tell you what it is, but roughly between 4 and 5% of your purchase price. So when you buy a property for, let's say, $1.8 million, you need to make sure you've got between 80 and 90,000 on top of that, secure, to make sure that you'll be able to purchase the property. I've known a lot of our clients that were really surprised because they were not advised about this. So they thought they were buying a property and for a certain price, and at the end of the day, they had to fork out another 5% on top of that. And that could be a really bad surprise. So I guess the next question, as I said, is when to transfer that money. Do I have to transfer it now? Do I have to transfer it with me when I come in? Do I have to transfer it after, when I've actually, got myself established? I would say it does not really matter from a tax point of view. So a question that we had a lot is, do I pay tax when I transfer money? Is it some sort of capital gain or anything like this? No. So you can transfer money to Australia, but from an anti-money laundering measure, you still might get questions from different bodies here and international bodies that may say, well, can you prove to us that that money is after-tax money? It's not income that you're bringing into Australia. And what I would say is to make sure that you have all of these documented to show that this just came from your bank account to a bank account under the same name here in Australia, et cetera, et cetera. So you can open bank accounts from overseas. Now, if the bank account earns interest, that's fine. So what would happen is that the bank would withhold interest. It has to withhold interest to you until you come here. You are a resident and you've got a tax file number to show to the bank. That withholding tax is about 10%. So when you transfer money to Australia, I would say then tax is not so much the consideration. What the consideration is probably foreign exchange rates. So I was looking at Hong Kong because I knew a lot of you were based over there, and you know, one Hong Kong dollar would be about 0.17 of an Australian dollar at the moment. It's been much lower in the last 3 years, but it's gone down over the last, I would say, 2 to 3 months. So what I would say to you is make sure that if you can wait until it goes back up, and I would say looking at those numbers, you know, 0.8, again, I cannot advise on this, but if it was me, I probably would not transfer it right now. I would transfer it when the foreign exchange rates are more beneficial to you. So we want the Hong Kong dollar to be much more powerful compared to the Australian dollar, because what that would mean is that you would be sending the same amount of money overseas here, or here in Australia, should I say, but you would get more Australian dollars in your bank account. The other consideration as well, again, which is not a tax consideration, it's probably more of a frequency. If you can do a lump sum from a cost perspective, it's always better because you pay less bank fees, etc., etc. However, you are more likely to get questions raised from the Australian tax office or things like that to prove that it was after tax money. But it wouldn't be too hard for you to show a bank statement from, you know, your home country, show your new bank statements in Australia, and for the Australian taxation office to see that, yeah, it was just your money. It's not an employer paying you, or it's not a business that you're running in Australia from overseas. So I guess there's a lot of consideration, but another consideration for you would be to research before you actually send money here. There are a lot of online banks, bodies. I think HSBC is also pretty good with this, that allow you to transfer funds to Australia at a very low sort of transfer rates, bank charges, compared to other competitors. So just don't make sure you use your current bank, that you make the research and see if there is a better way in your circumstances. The next question that we have is starting a business in Australia, or investing in Australia, which I think is also very important, and how you do this. So you've got different structures that you can use in Australia. Australia is based on the common law, so it's got very, very similar laws to the UK, and I assume in Hong Kong you also are very familiar with the Commonwealth. So we have structures like companies, partnership, or trusts. You can also have superannuation funds, but I will leave that on the side for now. Superannuation funds are pretty much your retirement funds, which are private retirement funds. It's something very, very particular to Australia. But when you invest or start a business in Australia, you generally have a choice between going in partnership with someone else, having your business in a trust, or in a company. Usually a company is the most favorite thing for businesses, because a company gives you limited liability. You know, you're not signing contracts under your own name, you're signing it under a different legal entity, and it gives you a little bit more protection. From a tax point of view, small companies can only pay 25% of tax. So I know you guys will laugh when I say only 25% of tax, But I'm sure that by now you would have realized that you're not moving to Australia to pay less tax. We are quite a very high tax paying country, and 25% for us is pretty reasonable. So bigger companies would pay 30% tax, but for any businesses that earn less than $2 million a year would be only paying 25% tax as long as they run a business in it. If you don't run a business in your company, then you would start paying 30% tax. And this is why investing would be different, because investing in Australia, you would rather do that in a trust, especially for capital appreciating assets. And the reason for this is the reason I gave you before, that 50% discount if you hold an investment for more than 12 months. That is only available for individual taxpayer, so natural people like you and me, and trusts. So usually if you invest in shares, if you invest in, public trusts or cash management accounts, you would do that through a trust, so you can actually gain access to these CGT concessions and a few other concessions that I will not bore you with. And again, this is why you need proper tax advice. But that's probably why people would use a trust more than a company. They would also use a trust for another reason, is that a trust is almost like a thief. A trust does not pay tax in Australia. The income goes through the trust and then it is distributed between the beneficiaries of the trust. And this can be fixed, this can be discretionary, depending on how you set up the trust. Again, you need good advice there, because it's really hard to change that down the track. But if you've got a discretionary trust, every year you can split the income differently. And a lot of our clients like you that do have, for example, family members overseas, if it makes sense to do this, and we receive foreign income here in Australia, we can use the trust to actually redirect the foreign income overseas and not pay tax in Australia whatsoever. So there's a lot of things here that could be done, because can you imagine if you invest in shares and dividends outside of Australia, but from Australia using your after-tax Australian money, and distribute that to your family members, may not be taxed, for example, on capital gains in Hong Kong. That means that we can basically be able to generate tax-free income. So that's a really good tax saving opportunity if you wanted to do that. So I'm happy to wait before we go to the next question. I think we had a few questions, Joanna, on the chat.
Yes, we have quite a few questions in relation to the tax part. I think we have Owen asked me if I'm receiving rental income from Australia as a permanent resident, but not yet moved to Australia yet. Is this just rental income paying the Australia tax? So basically, she got property in Australia, but she's not moving to Australia yet. So when she should pay the tax for the rental income?
So in your circumstances, so you are still a foreign resident because you haven't moved to Australia, even though you may have a permanent resident visa. So in that case, for that portion, and until you land in Australia, you would be a foreign taxpayer, which means that you would pay tax on your rental income at about 29%. So it's not like in a lot of countries, and I think Hong Kong does that, where the agent with all the tax and pays it directly to the tax office on your behalf. Unfortunately not. I assume that by now you have already applied for a TFN and you are already lodging a tax return. If not, you need to probably call me.
Yes, I think that's the right time to call Eric just to figure out that part about rental income in Australia. Because if you are still paying foreign income tax, I think it's greater than if you're Australian resident. All right, we have another question, if you can help, Eric, from Dixon. His question is about regarding dividends, interest distributed, accumulate insurance policies. If money stay in the policy account, for instance, not cash out, will those be taxed? So basic dividend had decided not to take a cash, or would they be recognized as income until you cash out from policies?
So this is a very interesting question and also a very broad one because there's a lot of components in this one. Usually, and I would say it depends, and that's always the answer. What we're talking about, what specific insurance policy, are we talking super, are we talking things like this? So when, so let's start with, I think you mentioned the dividend and the interest. So I go back and if you are a permanent resident in Australia, sorry, if you are a tax resident in Australia, sorry, you are taxed on your worldwide income. So yes, you are taxed on your dividends, you are taxed on your interest, and you would include that in your total taxable income. And obviously, whatever the total of that is, you would pay a corresponding amount of tax up to 47%. So dividend, interest distributed, any other trust distribution, any income worldwide, yes. Insurance policies, it's a different thing. So whether it's a life insurance, whether it's income protection, whether it's capital insurance. So again, it really depends. But usually the taxing point on that one would be not when you pay your premiums and all that, but when you do have a claim and you receive proceeds, that could be part of your taxable income in Australia. Yes.
All right.
Now, we also have super, maybe, I guess that's probably linked to this. Super, again, usually you can transfer your super to Australia, but it has some limits. So, because a lot of people obviously would also have life insurance policies attached to their superannuation overseas. So, what I would say when it comes to this is that there are things that you need to do when we look at superannuation. So superannuation, sorry, is a very an Australian term to refer to retirement savings and all your different government sponsored superannuation retirement. When there is something that you need to do, but you need to go and see an advisor through your accountant, a financial planner. In Australia, these people are licensed to give you advice on how to transfer this, what is the best thing for you in your circumstances, but usually that needs to be done within 6 months of you coming in Australia. So what I would say is when you actually land here, the first thing that you need to do is probably organize a meeting with an advisor and make sure that all these little things are being ticked.
Yes, it's very important to organize everything beforehand, especially speak to the advisor like Eric. He has a really wide connection in this area as well. So Eric, would you mind to answer a few more questions about the tax?
I could answer questions all night if you ask me, Joanna.
I'm so sorry. I think we want to keep time tight because, and then really you can, for circumstances that it's very special to yourself. The best way is always send an email to Eric. Okay, so I have another questions here. Someone asked that on a progressive tax system, if your income is over a threshold, which majority of them will have, and the whole income is taxed at a higher rate, or is it broken into multiple parts where portion below thresholds is applied lower rate?
I can appreciate the intelligence in that question because that's a very well formulated question. Number two, so yes. You wouldn't pay 47% on the whole amount. You would only pay 47% once you've reached that threshold. So often we refer to your tax rate as the effective tax rate because it's the accumulation of all these different percentages over your level of income.
Right, 40% above that threshold. Okay, thank you. I have Frederick ask, is that using family trust to buy properties instead of individuals? What are pros and cons? So basically it's about, I think it's about structure as well. So using family trust or using as an individual.
Yeah, so a family trust is what I referred to before as a discretionary trust. And usually we'll refer to it as a family discretionary trust. It's a mouthful. But what the trusts are always better. I would say in 99% of the cases, always better because it gives you the same concessions from a capital gain point of view. As I was saying before, you get that 50% discount on any capital gains, maybe, from selling real property, shares, etc., etc. So you get the same concessions, but a trust allows you to stream that income across with different people. So what you can do basically, and that comes back to the question before, because in Australia we are paying tax progressively, it's better to have twice 60,000 going to two different tax returns than 120,000 going into one return. Your effective tax rate would be higher. So what a trust allows you to do that, it allows you to actually stream. This is what we call stream, split the income to achieve a lower tax rate. So that's what trusts usually are better than than individuals. There's also other issues. So for example, if your job is at risk, and I assume a lot of you will take on positions that are quite risky. Some of you might even get personally sued. I know in my profession, I'm sure in Joanna's profession as well.
I have to have out there, insurance for this.
We're not going to give you ideas, guys, but yeah, we can easily be sued. So sometimes having a family trust, and usually how a trust works is you can elect who the trustee of that trustee is. And usually the trustee is the one that has legal ownership of all the assets. So for example, for me, my partner doesn't work. So I make sure that all the investments are under a family trust. And I have nominated a direct corporate trustee, so a company as a trustee of that trust. And what allows me to do is I've appointed myself as the director of that company. So I have control over the trust and its investments. But if someone sues me, they will not look through this company. So they will not be able to take the assets that are under the trust. They were only able to attack the assets that are under me. So again, more asset protection if you structure your trust better.
Okay, awesome. I actually have quite a few questions here. I'm not sure whether we're able to, but I think we will just pick a few of them. And really, the best way is really contact Eric directly. And I just, if you ask me Eric's email, but I already put down on that chat box. And so I just pick one. I'm so sorry about. I've got one from Stephen Chen. Yeah. So he said, can I just relate to your question? Can I set up family trust after I bought a property under my name?
No, unfortunately, and this is where you need to really get advice proactively, and that works for everything. When you invest, when you change jobs, when you change countries, when you change situation, when you divorce, when I'm going to say change wives, but yeah. So unfortunately, the title of your property would already be under your personal name. So what that means, if we then wanted to transfer that property into a trust, two things: capital gain for that little increment, if any, between the moment you bought it and the moment you transferred it. But the killer in the whole thing is that stamp duty that I mentioned before, because you would pay stamp duty again at 5%, where you would already have paid that stamp duty before. So that's why it's really important to avoid taxation and also more costs, because there's more legal costs, conveyancing costs, title searches fees, and all this sort of stuff involved in restructuring your assets. So the best thing you can do is make sure you ask someone. We set up the structure, you consider all your options, and then we do it well from the beginning. Otherwise, it might cost you a lot.
Actually, after this conversation, I think I have to speak to Eric myself. I start to worry. Oh my God, I haven't done properly. Everything I've been busy with.
There's always things you can do. I'm not a negative person. There's always, proactiveness is always good and rewarded, but there's always things that you can do to mitigate the risk and the tax down the track. It's not a lost cause. I'm sure we can solve, Joanna.
Thank you. Okay, so about the prop. Another candidate asked, were they deciding to buy a house in Australia under the personal name, or have the name share under which is joint tenant? What would be the tax consideration?
Yeah.
Instance, again, he's a housewife, is not earning income.
Yeah. So I guess here I would like to know, and this is again why every advice is based on individual circumstances, but I would ask the question, would you live in the property? Would you rent it out? Because my answers would be different depending on what you do. If you live in the property, In Australia, we have what we call the main residence exemption. So as long as you reside in the property for the whole period of ownership, you get a main residence exemption. That means no capital gain applicable to your property. So where you buy it for tax purposes doesn't really matter. For asset protection, however, we would still need to talk and make sure we're doing the right thing here. But it would be harder to put, for example, your main residence in a trust, because then, because of that, we could lose the capital gain tax exemption, or in order to retain it, there would be more costs involved in doing proper lease agreements. I'm not going to bore you with the details, but again, you can see that whether you reside in the property or not, if you reside in it in your individual name is fine. If not, usually a trust, yes.
Okay. Someone asked, they actually had the difficulty to see your PowerPoint at the beginning.
Oh, no.
So they really want to know, because they are going to different cities.
Yes.
And I know you're based in Gold Coast.
So
if
I'm
they go to
based
Sydney,
on the Gold Coast, yeah.
Yes. Please share with us if they want advice from Winnipegs, how they can get service if they are going to Melbourne or Sydney or Adelaide.
Yeah, sure. Well, we've got the contact details here. And as you said, so I will show you a little slide and we'll share my email address. I'm always happy for people to get in touch with me, and I can introduce you to the people in the right offices, because depending on what you do, what you want to do, I know one person compared to another person that could be good for you. So again, I'm always happy to be the middleman, but I would always say as well, I mean, I'm personally looking after clients all over Australia. I mean, if COVID has taught us something, is that, you know, you don't necessarily need to be face to face to be able
Absolutely.
to
Yes.
provide advisory services. So if you guys are willing to, you know, stick with me despite the fact that we're not in the same state, we can certainly do this. So now, as you can see on the map here, we've got different offices. Obviously, I would be able to introduce you to the right people. And obviously, each state has different state taxes, but usually an accountant, and especially a good accountant like yours truly, is aware of all the state taxes. So it's really important because, for example, when you deal with a business, most of the time they're a national business. So you need to know about all the different taxes. So it's not because you're in New South Wales that you need to get an accountant in New South Wales. But if you're in New South Wales and you're really craving a face-to-face meeting with your accountant, sure, I can introduce you to someone that can do that.
Yeah. I don't think, you know, lots of accountants haven't seen me in person at all, so it doesn't matter, isn't it? It's really about get work done. I think Eric is really, he's specialized in this area. Please note down Eric's phone number and his email address. I think all of you, I want everybody look after really well in terms of their tax to make sure, you know, it's really important to organize everything in advance before you do anything, such as buying a property now. Think about Eric's advice. Eric, I think we are hitting the time. Now, everybody, thank you very much for participating in today's call. Actually, this call is currently on YouTube Live, and I'll be sharing the link to everybody using an email like newsletter. And then if you have any questions in the future, you can actually send it to me directly, and I will gather them together so that in the future we can actually have another webinar like this. That's really helpful. Eric, do you have anything to add? I think you have another one you want to add before we
Yeah, well, I think you've stressed on it quite a lot, and this is what I wanted to tell people to make sure that, and I think that was the last question. Why do you need to get the right advisory team? I think we've been clear enough to say, well, first, obviously, advice is important. So I'll give you a few examples to show that, you know, you can take on unnecessary risk, or you might not meet a deadline to be able to not pay tax, like with your super, or not be structuring things correctly. So it's important that you reach out to people that actually know what they're doing, are a national firm. Don't go, I would say, to the little street accountant that does not really know about international taxes or have access to, you know, know-how overseas and people that can really help. So really, and I'll probably send those slides, but there's a few different things that William Buck can do. I do not like the advertising, but we can do a lot. And we work with financial planners, as I said, brokers, etc., etc. So please reach out. I'm very happy to have a chat with you and point you out in the right direction.
And Eric, before you go, we actually have quite a few hundred successful candidates. How can you handle the large amounts of clientele? Because I'm sure lots of people after they watch these live YouTube live, they would like to contact you. So how are you able to, about your team, how are you able to handle these large amount of inquiries and then clientele?
We have a very good team, and we are very flexible in terms of how we manage all the work. So we are structured in a way that obviously we are able to take on large volume of inquiries at once. We usually, if we're only humans at the end of the day, we have to sleep a number of hours at night. So if we can't get to a query before a certain time, we would let the people know, so then they're not there waiting, wondering if they're going to get an answer from us. So, but you know, we have a policy that we usually get back to people within 24 hours, and it will not be a problem. I actually want questions. I want you guys to get in touch with us, so don't worry about this.
Yes, yes, and then just a disclaimer. So. We respect work from Eric, and then because I'm a registered migration agent, so we don't take any commission from winning back. So if you have any questions about yourself, about your tax, about property, about your rental property, please contact them directly. And because they are specialized in this area, and they have a code of conduct, and they advise registered taxation agent. So all the information you provide them are really confidential, just to make sure that everything is actually within the law. And thank you very much for everybody joining us. And this is actually our first one. If you tell me, put in the chat box, if you want future webinars like this topic, please say yes in the chat box. And I would like to gather some of the response from you to see whether this is. Thank you, Paul. I've got one. Yes, if you want to know, attend more webinar like this about tax, others or legal part, please put say yes in the chat box. So I will then understand. This is actually. Thank you. We've got quite a lot of yeses.
We'll have to do a session on trust, Joanna. I can see that happening already.
Yeah, look at that. You've got many yeses, and again. If you have any questions, you don't want to just, but always to contact Eric. But for small questions, what I do is I will gather them together. And if we have more common questions there, today I think quite a few questions we didn't have time to answer them. But please contact Eric directly and setting up all the information and structure, family trust, and anything like that. Thank you very much. Okay, thank you very much. It's end of today's section.
Much, guys. Thank you, Joanna, for having me.
All right. Okay. Have a good night. It's quite late there. Thank you for your time. Thank you, Eric. Thank you, everybody. Mickey, Owen, Rita. I've got quite a few. Stephen, thank you. I'm sorry, I probably missed your question. Paul, Tim, Ken. Thank you very much.
Thank you, Joanna. Bye-bye.